Talk about business now. And over the past 15 months, the Kenyan currency has remained stable against major global currencies, but notably so against the US dollar. The currency trading at an average of 128 shillings to 131 shillings to the dollar. It is this stability that experts now say has been manipulated. They say it is unusual for currencies to remain at the same level for a protracted period of time. Jimmy Mbogo with the details.
In the first quarter of 2024, the Kenyan shilling took its worst hit, significantly depreciating against the US dollar to trade at over 160 shillings to the dollar in January of 2024. This was before gaining against the greenback a month later to trade at 144 shillings to the dollar by mid-February, and later down to 127 shillings in April, where the currency has since been trading at an average of 128 to 131 shillings to the dollar to date, marking over 1 year of Kenyan currency stability. But it is this stability that is now being questioned by the International Monetary Fund.
For example, they were in town 2 weeks ago. One of the things they told us is that the exchange rate is too stable. Yes. One of the things the IMF told us when they were in town 2 weeks ago is that the exchange rate is that they think it is interfering with the transmission and that it is interfering with inflation targeting.
The government now seeking to distance itself from the insinuation of currency manipulation, with the president's chief economic advisor David Ndii now saying they have taken a pragmatic approach.
So a lot of these debate and the IMF asking whether it is moved too stable, too unstable, is basically witchcraft. This is just witchcraft we economists do, which can go this way, can go this way, but the policymaker has to be pragmatic.
But Kwame Owino from the Institute of Economic Affairs disagrees.
So that leads me to the thinking that whatever it is that is happening with the Kenya shilling is something we need to observe and study very, very clearly. Because whichever witch doctor that is, he's very effective for now.
According to Chachi Logutu, an economist from IC Group, the numerous reasons given to support the stability of the shilling, such as portfolio inflow from infrastructure bonds, tapping into the international Eurobond, and increased diaspora remittance, still do not explain the protracted stability of the currency.
So if you look at it all, it just points to the stability being pointing to management of the shilling, at least to ensure that it's within the current levels. And why do I think it's been managed? The restoration of the FX interbank markets, and the impact of all this is at least to ensure that our external debt services is certain.
Churchill warns that although in the short term the move may reduce imported inflation by managing imports, it may not hold in the long run. Jimmy Mbogo, Citizen TV, Nairobi.